Hello again, Maverick traders, and welcome out to another currency recap. This is Ankit here, and let's break down today's market price action. There's a lot to cover as we are getting a lot of movement in the markets, which is again a good thing. Let's take a look at what's really happening in the markets, do our top-down analysis, take a look at currency baskets, and then talk about the possible setups that we're looking for in the upcoming 24 hours. So let's get on to it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at the market analysis, let's just start with the news of the day. Markets again tumbled as the bond yields soaring higher. So the narrative hasn't changed. For the last 2-3 weeks, we are seeing the exact same narrative. The yields are rising, which is now putting a lot of pressure on the markets. You can see we have tumbled in the last 3 weeks. And the job openings today, boy, that exceeded estimates. So which again is solidifying the narrative, which is higher yields, higher rates, and that's just going to weigh down in a lot of other assets. Now, the other interesting movement today was the Japanese yen surged higher after the dollar yen touched the 150 level. We saw a massive 300 pip move. Question is, did the Bank of Japan intervene today? We'll go through and see if that was the case, but the price action certainly seemed like there was some sort of intervention. No confirmation from the Bank of Japan yet, but this is something we have to be very vigilant about in the next 24 to 48 hours if we see more efforts of this intervention. So let's take a look at the numbers today. Japanese yen, again, after having that massive move intraday, now up 1.12%. So something we have to look at and see if this is again a selling opportunity or is that something has some more legs behind it. We'll take a look at the charts. Look at the dollar. Dollar was not the best currency today, but it is continuing to move higher, which has been the story. Massive run in the last month and a half and two. Dollar is sitting at some really strong levels. Outside of that, European currency is not really where the money is flowing. I mean, look at that. The numbers are pretty small, which means that it's just consolidating after that big fall that we saw last month. Now, let's take a look at the growth currency. So the big numbers are Australian dollar is one of the worst currencies out there. Again, we had the Bank of RBA yesterday, and again, did not help the Aussie at all, which means Aussie is likely to move lower until the market tops or the dollar tops. There's a lot of this price action that will end up in an exhaustion phase. We haven't really hit that level yet. Here we are with the New Zealand dollar following the suit, but again, not the same as the Aussie. Again, there is a divergence. The Kiwi is not that weak, but it's following suit. We have the RBNZ tonight, and maybe that will dampen some of that moment here. The sentiment in the Kiwi here, but overall, the central banks are not as hawkish, which again is not the best scenario for these currencies. Now, looking at the other numbers here, look at the S&P down 1.37%. Again, every rally is being sold, and that's why we always say trade with the direction, trade with the trend, and now trend is actually heading lower. And look at the bond yields, still high, rising down up again 2%. When you look at the charts, you'll see the why there's such a big move, because these bond yields are at some record levels now, affecting a lot of the other asset classes, which includes the S&P, the equity markets, and also the gold market. I mean, gold market had the biggest drop just last week since 2021. So again, a lot of movements that are taking place. Oil being back and forth today, had an update today. Now, in the crypto markets, down 2.12%, but again, cryptos are not really falling apart. They're just kind of moving back and forth within that range. The Bitcoin Cash was the best cryptocurrency yesterday, and now is the worst currency today. So a lot of back and forth, but outside of that, all these numbers are very small, which means not a whole lot of opportunity there. But there's definitely a lot of opportunity in the currency markets. Now, taking a look at the charts here, and looking at the charts here, you can see we are now sitting at a -3 on the score for the week. Again, that's a bearish reading, and you can see in the S&P chart, we had a nice little bear rally. We retested the prior support, which is now the resistance, and we just rolled over. So again, right now, based on this daily close, so price action looks very bearish. So nothing really has changed for the next 24 hours. We probably see some more weakness until, like I said, we do an exhaustion, sort of a gap lower and reverses higher. Again, not the price action we're seeing right now. So that means that we have probably more pain likely. Now let's take a look at the schedule here. So we already have the RBA out of the way. No rate change. We had a massive sort of a jump here in the Joel's job opening. Remember last month when we actually dropped quite a bit? There was a lot of movement there, and here we are almost jumping back to 9.61 million. So again, strong for the dollar, is strong for the yields, and bad for the markets. We have the RBNZ tonight. Again, not expecting a rate change. I'm expecting not a whole lot of movement. I think we'll probably see the same thing as the RBA, and that is going to either no movement or just sell the rally on the Kiwi here. The next 24 to 48 hours, we still have a lot of data to go through. We have the employment and the ISM PMI tomorrow. Then we also have the NFP report and the Canadian employment report on Friday. So there's still a lot to go through. And it seems like there's definitely more opportunity on a day-to-day basis as these markets are moving lower. So let's take a look at currency analysis, take a look at the velocity scores, and then pick those pairings accordingly. Now, looking at the velocity score, you can see that the European currencies are kind of right in the middle there. They're not getting any bid. At the same time, right now, the selling is not happening there either. I think we're just getting a little sideways price action, which is, again, give us an opportunity the next time we see European currencies take another leg lower. But right now, they're kind of right in the middle there. Where's the money going? Dollar, and then here we are with the yen. So we'll take a look at some of the yen pairs as we look at the charts. And the Canadian dollar is at a -1 and Aussie is a -3. I know the Kiwi's at a -2, but again, tonight after the RBNZ, I won't be surprised if the Kiwi sort of move a 0.1 above or lower based on this statement. So let's get into the charts.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And looking at the charts here, let's just start with the bond yields. So you can see why the markets are freaking out so much. I mean, look at that run that we're having here. And even if you take a look at the longer term charts, like a weekly or a monthly, so you can see the levels that we're currently at, which is again going back to 2006, 2007. Remember that led to the recession in 2008. So right now the big question is this the warning sign as the markets head into 2024? Are we going to see a recession next year? So that's what the market's freaking out about. As you can see that the gold market, it's also holding, sort of falling apart on that as well. Here we are on a daily chart. Look at that gold in the last few days. So a lot of this correlated moves are taking place here. So let's just start with the dollar yen first, because dollar yen had that big movement today. So let's look at 5-minute chart. You can see that how big of a movement that was. That was about a 300 pip move just in that short period. So since then, again, we didn't get any confirmation from Bank of Japan that they intervened, but look at the price action is going sideways. I think the next 20 to 48 hours, you want to be very careful with this Japanese yen. Again, if the Bank of Japan does intervene, that is something it's a bit of a headwind in the short term. If you look back last year around the same time, we had a couple of interventions from Bank of Japan. So here we are starting with the same sort of narrative. So if you want to look at a reference, look at last year and then see how the price action proceeded after those interventions took place. So yen looks interesting. I don't want to touch the yen right now. Like I said, if you look at the movement here, it pretty much didn't go anywhere for the rest of the day. So my rule is that if I want to take a look at a break, I need to either see a break above or lower. Right now, not really seeing that. We're kind of right in the middle there. So the dollar yen is sort of out of that question there. Let's take a look at other currency pairs. Look at dollar versus franc. Nice little pullback. Still continue to rally. We have the euro dollar. So a lot of the dollar crosses still looks good. I mean, look at the fall all the way from like 109 starting September to now 104.66. So pretty robust move in some of the dollar crosses. We already know how that will happen with pound dollar. And actually, the one trade that was sort of lagging is catching up as well, which is dollar CAD. Remember, the entire month of September, CAD was actually outperforming the dollar, but here we are seeing a switch happening here. So I like this dollar CAD on further upside, especially if we continue moving higher. The next level of resistance is about 138, which is about 100 pip there. But if we can break above that level, you can see that's where some big moves can happen. But for now, 100 pip is our ceiling, but then if it breaks above that 138 level, I definitely like it more further to the upside. Aussie dollar, I mean, right now, as you can see on a daily chart, we are back at the lows from 2022. So the support is at about 0.6189. It's sitting at 63.02. We still got about another 110, 120 pips before we touch that support. But again, if we break these levels, that's where some massive breaks can come if we break those levels. Kiwi, you can see I like the Kiwi on the downside, especially with the RBNC tonight. This thing is, again, not falling apart yet. So you got to be real patient with that. I want to see this break lower before we want to jump in. But there's definitely similar scenario as we looked at the Aussie. But right now, Kiwi is not falling apart. So we got to be a little patient with that. Now, taking a look at other sort of crosses here, we have some of the yen crosses, but like I said, we can take a look at some of the yen crosses, but until we know what the direction is for the yen, it's a bit of a tough call here. So I think the best sort of scenario right now is to stick with the dollar crosses until until the narrative changes. We want to continue kind of following the same sort of price action. You can see we are getting a lot of consolidations, pullbacks, but those are just buying opportunities. We still have a little bit more room for this to run higher, and I think that's the right place to be as the risk sentiment continues to weaken. So in conclusion, the RBNZ rate statement tonight, that will be the first focus. I will be looking at Kiwi dollar onto the downside and a bunch of other Kiwi pairs. Outside of that, another day tomorrow, we'll see if the yields continue to rise and if we start to see the dollar pair continues to move. Again, that's just the right place to be. And again, if you're looking for the reversal, this is not the right time yet. If you think the market's kind of look extended, then wait for an opportunity. And right now, nothing on the chart or the data is telling us that it wants to reverse. So no reversal trade, only look for continuation trade. Trade with the trend. Trend is your friend. Thanks everyone for joining. Happy trading. We'll see you in the next update.